Good evening. So this is the Oak Bloke, and this article is going to be on E-Star resources. So this is the Substack article that I've not yet published, but you're the first to get to see this. So this covers AIM-listed EST, so it's a copper prospector in Kazakhstan. This is a photo from their website, and yeah, this is, I guess, where they're sampling the ground and sampling for copper, gold, lead, zinc. So it's a small company. So it's 4.5 million market cap. So the yeah, that kind of reminded me of that. So anyway, that was that. The E-Star is so there's three things to say about this, three strategies as they put it. You've got the first one, and then perhaps main one, may not be the main one, but I suppose the one that's the most far advanced is for Cuba. And this is a 20 million tons of ore at 1.16 copper, 1.54 zinc, 0.27% lead. So that's a mineral resource estimate that was defined, I think, last year. So when you actually do the maths on that level of ore, that's the equivalent of 230 thousand tons of contained copper. And if you do the maths on that, and I think I'm only using 9,500, I think I used for the copper, and then obviously the zinc is less. I think zinc 2,800, and the lead about 1,600. So today's prices, in other words. So obviously, that's in the ground. That's not, obviously there's a whole bucket load of costs that would have to come out of a 2.2 billion dollar resource. I mean, obviously there's the capex, there's the smelting and refining costs, there's obviously the operational costs. So I'm not saying that this is worth 2.2 billion, because of course it's not, but certainly the resource is not insignificant to somebody. That's the first strategy or resource project. The second project is earlier stage. So this is a porphyry and epithermal gold exploration targets, and they reckon it's potentially into the millions of ounces. So multiple opportunities. And it is supported by a grant from BHP, the Explore program. And then the third one is earlier stage still. So this is a JV, joint venture with GTEC. GTEC being these guys here. So these guys are kind of experts with magnetic resonance, geophysical data, GIS, geographical data, gravity data, magnetic data. So you can sort of see for yourselves here that these are sort of experts. And the deal is if GTEC can come up with, so the initial targeting is at no cost to E-Star. If they can come up with a defined resource, then great, E-Star will give them some money. So there's these guys talk in their investor relations about having the potential for a fee. Now it's been a year, it's been 12 months, no news as yet on number 3. So that's kind of kicking around in the background. But to be fair, when you look at this what they're up to, they've got their fingers in lots and lots of pies, lots and lots of different projects across many different jurisdictions. So USA, I think Africa, yeah. So there's stuff with offshore oil. I mean, it's kind of how tangible that is. It's difficult to say, difficult to know, but those are the three. So this sort of reinforces that, and these are different parts of Kazakhstan, and these being the different sort of areas with different types of rock and different types of potential project. Okay, so this first one that's the most near term, so the 3.2 contained. So this, sorry, apologies. Let's go back up to this. It's well, there we go. That's the first thing. Helps if you don't add a billion randomly, doesn't it? So let's just change that now. Apologies. Don't mean to mislead. Yeah, so this sort of 2.2 billion. I mean, it is 2.2 at the moment, but EST are looking to upgrade that. So will it stay at 2.2? No, probably not. They're doing infill drilling. They're doing further drilling this summer. Um, they've reported back that they've recorded further mineralization. Okay, so potentially leading to a mineral resource increase. And actually, when you look at the these results, I mean, 3% copper, 2.6% copper, 2% copper, 1.4, 1.6, 2.9% zinc. It's all looking reasonably good, I would say. I mean, again, these are just samples. These are sort of just drill samples. And it's also in the same area. So this Talovskoy is part of this strategy. One is that they've done some rock chip samples, and I mean, look at these results. 8% copper, 5.2% copper, 2.6% copper, 11% lead, and then you can see here 3.8 grams of gold, above 100 grams per ton of silver, above 100 grams of silver, above 100 grams per ton of silver. So some really stunning results. Above 20% lead. So yeah, so certainly these rock chip samples are pretty nice. So who knows? I mean, maybe that will be, we'll swap out the 2 for a 3 before too long. So that's kind of where we're at with this now. Of course, the $2.2 billion question is, well, how much would somebody pay for something like that? Now, and of course, how much more would it be worth if they were able to increase the MRE? So what could that look like? And I'll come on to that in a minute, but let's move on to the second strategy, the gold. So I mean, it's interesting because of course a lot of gold share prices have gone up. I mean, I'll just call out this one as an example that since the start of 2025, I mean, what was that, £1.60, or yeah, £1.60. So it's doubled in price, pretty much in 2025. Okay. Obviously, East Star Resources hasn't doubled in price. Now, this is a gold producer and a large one, well, silver and gold producer, but there's, I think it's fair to say that there's some gold explorers, producers, because obviously these are exploring as well and developing gold mines. That some have seen the benefit of a higher gold price, whereas others haven't. That in here there's no reflection. Now, what Eastar describe as this target, the snowy target, is that they say the geography and the geology is kind of like the Andes. So this reference to Hochschild isn't entirely coincidental. That if this obviously it's further ahead than East Star Resource, it's far further ahead. Obviously, it's been mining for many decades, and that 1.6. If we go back 5 years, I mean. I actually owned it back here, and I mean I haven't sort of kept it to here. I decided to call it quits. Back about here, but yeah, I for a long time wrote articles about Hochschild saying, that like once their Brazilian production's online, and once their I think Mara Rosa mine is producing, and once they close down Palancata, once they've there's various things they had to do, but once they did those things, then we would see the benefit of that. And of course, we have, I mean, it's gone from 60p to, so that's sort of a five times. But yeah, this has the potential, and it is only potential. It's nothing. But I make the point here that uh, E-Star is 363 times cheaper than Hochschild, for example. Um, so, even if you said, well, there's only like a one in 300, 1 in 400 chance of this being the next Hochschild, statistically, I mean, that's the number to kind of beat a probability of lower than 363, statistically speaking. It is very early stage, but yeah, when you sort of see this historical, where did I see it? It's yeah, there's a historic report reference. Let's just go into the slide deck. So it's here, multi-million ounce potential. Yeah, this historic report, production from 1968 to 1970. So, I mean, presuming that what they're referring to here is something like this artisanal gold mine. So, in this area where they are testing and drilling, someone, albeit 55 years ago when technology wasn't what it is today, managed to get 21,000 uh, um, tons of ore at 31 grams per ton. Okay, let that sink in. Bearing in mind that two grams a ton, 2 grams a ton is probably economic. Well, in fact, 2 grams a ton is definitely economic at today's gold price. But I mean, 3 grams a ton, and you're highly profitable. So have a think about what 30 grams or 31.2 grams per ton of gold is like from a profitability point of view. I mean, in fact, let's just grab our calculator. So, I mean, if you're getting so 31.2 grams would be well, I mean, it's about an ounce. So I'd say it's divide that by 28 would get you to sort of 1.11. So 1.11 ounces times that by 21,000, times that by 3,300. I mean, so somebody pulled out, I mean, 21,000 tons. I mean, obviously that's, well, obviously that is a lot of rock, but I mean, we're only really talking, I don't know, if you were running a mine, a wash plant that was doing, say, 3,000 tons a week. I mean, that's 7 weeks of production. Or if it was 3,000 a month, it's 7 months of production. I mean, it's not, this amount of resource to get $77 million in today's prices is not dramatic, shall we say? And then that's sort of plus to 2067. So I mean that is so that's effectively saying that's 2%, or well technically 2.067% of all the ore is silver. And again, if we multiply that out by 33, I mean, that's another 14 million. So, somebody got 90 million, the equivalent of $91 million from some production back in the day. But these numbers are very, very attractive. I mean, that's 2000 is 2%. So 2 kilograms per ton is oh no, sorry, apologies, it's not, it's 0.2%. 0.2%. So it's but yeah, that's some decent results. And what they're sort of exploring is this um, soil anomaly. So, I mean, obviously 0.28 grams of gold and 7.2 grams of silver. I mean, that in itself is not that exciting, but then that's at the soil, at the surface. I mean, if you dig down, if you trench, if you test, if you drill, so these soil anomalies, it's what's underneath that soil that could be the exciting bit. That this is just the overburden essentially. But if the overburden's got that much in it, what's when you get down to uh, the pay dirt, uh, what does that look like? So could be interesting. Could be interesting. Again, um, if it sort of worked out. I mean, if we sort of took that to be a sort of an ongoing resource, I mean, it could be worth into the billions theoretically, into just theoretically. So multi-million ounce. I mean, if it is multiple millions of ounces, then yeah, it's worth at least as much as the copper. Um, yeah, potentially more than the copper in Vancouver. So, I mean, they've done 2,800 samples. We don't know. We've yeah. This will assist with the follow-on program and provide the information. So there's some news flow waiting to come out of this, and then the final one then is this G-Tech and the as I say um, the potential, I guess, of them finding something. So that's kind of what I call a free carry, in the sense that if they actually find something, then they will get paid a fee. If they don't find anything, there's no cost to East Star. Okay, so that's another sort of uh, I guess a bonus. So, I mean, just kind of to the final part of this presentation. So, eStar. I mean, when I looked at the accounts, I mean the cost of keeping the PLC running is sort of somewhere between zero point 0.5 and 0.75 per million per year. Um, I mean, it did have some grant income. It had that much cash in the last accounts. It raised some cash last October, so it diluted 100 million shares, so it's now at 400 million shares roughly, and it's got 1.5 in the bank, minus of course this cost here. So here we are, sort of a year later from the last account. So I mean, assuming it's that number there, we've got something like at the moment in April, something like 0.9 million left. So there's enough there to kind of, well, I've said until 2026, but probably until sort of sometime 12 months or 12 months time in 2026, maybe a little bit more than 12 months. The directors participated in that fundraise last October. They bought £80,000 of shares, which uh, I've kind of said, based upon how much they get paid, that's kind of equivalent of sort of 6 months of the salaries of all of the directors, and they own 24% of eStar. So they're not doing this to take a fat salary. They're doing this because they've got skin in the game, and obviously that's quite a nice um, that's encouraging for investors, of course. So yeah, I mean, if you take the market cap's 4.4 million, if you strip out that zero point 0.9, you kind of end up, you're basically paying 3.5 million for those three projects. So I mean, I'm sort of saying, well, the third one is just zero at this stage. I mean, there's no value that you can really assign to the work G-Tech are doing, but who knows? I mean, that could turn into something in time. Um, so I'm only really valuing this on Vacuba, and coincidentally, one of my other shares, so Baker Steel Resources Trust, sold their share of this Nusia mine in Norway. Uh, couple of months ago, not long ago, really. So, I mean, it's in Norway, not in Kazakhstan, which you can take what you like out of that. I mean, on one hand, Nussir in Norway is obviously much higher costs, but equally, you might argue, well, Nussir in Norway is a safer jurisdiction than um, I mean, both of those two countries border Russia, so you could make the same geopolitical risk argument, I suppose. But it was interesting that Nusia is 200,000 kilotons of copper, contained copper, and that was going to be sort of mined out at 14,000 kilotons for 14 years, and it's a 1.14% grade. There's no zinc, there's no lead, so it's just copper, and that was sold for $55 million. So, to my mind, I mean, this read across compared to the 230,000 kilotons at Vacuba, is sort of 15% more, and it's slightly higher percentage wise. But I mean, 1.14, 1.16, so 1% there. So let's not worry about that too much. But obviously, this stuff here is the byproduct credits is worth something. So you could add about 40% of the value is the byproducts, the zinc and the lead. So on that basis, if we were to take 55 million, add in the 40%, add in the 15%, I mean, that gets you to 88 million or 67 million pounds. So I mean, that's to my mind, that's roughly like a direct comparative valuation of something similar to Vacuba. Um, as I say, it's not a perfect read across, but it's probably the closest thing. And it was bought by a company called Blue Moon that's now developing the mine. So, the sort of analogy is pretty much the same. Pretty much the same. Um, so that valuation puts no value on Snowy, no value on the third strategy, GTech, um, doesn't put any kind of value on the fact that Vacuba is right next to roads, it's near to a smelter, it's got infrastructure, so it's got good economics. There's no sort of real value. I mean, comparing that to the north of Norway, which is a bit of a chilly place where I imagine that you've got to worry about those infrastructure points a little bit more, probably that 88 sort of seems like a sort of reasonable assumption to make. So on the basis that we say, well, the net price that you're paying is 3.5 million, so you're essentially getting it at 95% discount. So that compared to that is a 95% discount. Potentially more if you sort of said, well, project two's worth something as well. So I guess where this will go, where this could go, is obviously BHP are involved. So I mean, I've said deeply involved. I mean, they've got a representative on the board of directors. They've given a grant of £400,000. They're sort of participating in the program. We know that East Star have put the asset up for sale, and that they've got expressions of interest. I mean, it would be reasonable to think that BHP is one of those expressions of interest. But it's interesting that there's pluralized expressions of interest. So they're not just beholden to one buyer. And there's potentially several. I mean, um, Central Asian Metals is located reasonably nearby, so it um, wouldn't be impossible for them to be involved potentially. I mean, these guys are prospecting and looking at new projects. They are considering new projects. So Vacuba would be a logical choice, I believe. That's just my opinion. Um, and yeah, so I quite like this. I think that there's potential for something there, and I mean, if they got something close to that, then the amount that if I mean, even if it was a third of that, if they had 20 million, um, what could they then do to use those funds to develop Snowy and other ideas, other projects? I could see that being very that would sort of create a momentum for it. So yeah, I think as it is at its current price is very good value. It feels like it feels like, with copper. I mean, copper itself is moving into deficit. We're told that that miners are looking to secure new sources of supply, that Vacuba could be a great project for someone. Obviously, not a huge project. 0.23 million tons is not vast, so that's probably why that one of the reasons why they're looking to increase that number, because if they can get it to 500,000 tons or 1 million tons, 1 million tons plus, then that puts it in a different league. And for the likes of BHP, I mean, would they want to take on a small point 0.2 project, possibly not big enough for them, not big enough for a tier one? Don't know, that's just my opinion. But yeah, so that's the article. Hope that's useful. None of this is advice, this is just me um, talking through the idea, and you make your own investment decisions, so make of this what you will. But um, yeah, you can find this and other articles at the oakbloke.substack.com. If you like the video, then just like and do all the normal things at the bottom there. So and more videos to follow soon. Oakbloke saying cheerio for now. Cheerio.